If Tarantino did high vis. The new Chancellor's visit to Tilbury Docks might fit right in. Award of $2.1 billion in hand for ramping up no-deal preparations. But his message of resilience was undercut somewhat by the Bank of England's warning today that Britain could face a possible recession by 2020. Mark Carney and co were pretty pessimistic today. Not only did they flag a 1 in 3 chance of recession next year with a smooth Brexit, but they gave their starkest warning since the referendum of what a no-deal Brexit would look like: higher inflation, slower growth, a sinking pound. And a no deal, said the governor, would be worse than even years more uncertainty and confusion. That's how damaging the shock to the UK economy would be. The pound has been trading at a 28-month low since Boris Johnson became Prime Minister. And this week, Capital Economics warned that a no-deal scenario, it could drop below $1.05 for the first time since 1985. A far cry from the determined do-or-die attitude that the government has been trying to spread.
Our economy is very strong, and we want to make sure we use the strength of that economy to meet the needs of the British people, and we can afford to make many choices. Since I have arrived at the Treasury, I have turbocharged our preparations. This government is absolutely clear. Come October the 31st, we will be leaving the EU.
So where's all this taxpayer money going? $1.1 billion will be spent immediately, with $434 million on stockpiling medical supplies, $344 million on more border officers, and $138 million on a PR campaign, with £1 billion left in reserve. Labour dismissed the new cash as an appalling waste, given the strain on public services. For industry, the problem remains that there's still little clarity on how things would work if we crashed out, and whether new staff would be ready in time.
It takes a while to hire staff, to train them, and to get the new IT systems up and running, and we're desperately short of time for that. This should have been done years ago.
Back in Threadneedle Street, the governor was clear that while he welcomed the boost to no-deal preparations, he didn't think it would cancel out the impact of a disorderly Brexit.
No deal would, very unusually for an economic shock, be an instantaneous shock, not just to demand, which is what everybody is used to seeing, but a shock to supply. There will be supply capacity in this economy that will become uneconomic. Now, the degree to which that happens will partly be influenced by no-deal preparations, but not totally eliminated, as I just said, by those no-deal preparations, because the fundamental economic trading relationship has changed.
And it's not just Brexit adding to Britain's woes. The bank said today that the slowdown in the global economy had been sharper and more pervasive than they'd expected. That means the silver lining of a falling pound wouldn't even end up benefiting manufacturers, as foreign markets would be buying less as their economies shrank. With only 91 days before the deadline, it's not long before the government's optimism and the bank's warnings will face the test of reality. A very unique British type of movie.
Joining us now from Dartmouth College in New Hampshire is David Blanchflower, former member of the Bank of England's Monetary Policy Committee, and from Central London, Andrea Hosso, a member of the group Economists for Free Trade. Andrea Hosso, how do you read the Governor of the Bank of England's warnings today?
Well, I don't see the situation as darkly as Mr. Carney does and the Bank of England does, but actually we're used to this kind of project fear projection, which we've been seeing for 3 years and even before the referendum. I do agree that a no-deal Brexit will cause some disruption to the economy. How much of a disruption will depend on how much preparation has been done for this eventuality. And quite frankly, to prepare for a no-deal Brexit is something that even the previous government should have done. That preparation should have started immediately after the referendum result became obvious.
Right.
Because when you have that, sorry, just my last sentence, when you have that kind of situation and you expect negotiations with your counterpart, then you have to be prepared to walk away if you cannot have an agreement which is beneficial for your country. And that's exactly how the European Union countries feel about it as well.
Right.
And if you,
I must
yes.
cut in and bring in Professor
Sure.
Blanchflower. How do you read the governor's position today, and indeed the government's response in putting all this money up to try and protect things?
Yeah, well, I think the likelihood is that the forecast that they gave for a very smooth Brexit is overly optimistic. We had new data out this morning showing that the UK manufacturing is in recession, construction's probably in recession, the global economy is slowing. So that even in the face of a smooth Brexit, they're probably overly optimistic. They probably missed the big downturn, and uncertainty is very much ruling the waves. And a no-deal Brexit looks horrendous to disastrous. The OBR the other day looked at one of the scenarios that the IMF gave, and they forecast 2% drop in GDP, a recession. And the IMF have argued that there's even worse possibilities coming. And in fact, the IMF's view, and I share it, is that a no-deal Brexit is certainly a downside risk to the global economy. So it looks like Brexit looks like an economic disaster, and it also couldn't come at a worse time as the global economy is slowing. So I think that probably Mark Carney was overly optimistic, and the economy is going to slow very sharply, even without a no-deal Brexit.
Andrea Hosso.
Yes. Well, I don't share that pessimism, as I said before. I think that, yes, really, there is a global slowdown, which means that our competitors will have a similarly difficult situation. I think that those companies who have not been exporting to the European Union will continue their business, whether they sell their products in the country or outside the European Union. Those companies that export to the EU are a minority, sort of 15% of companies, some big, some small, and I'm absolutely sure that most of them have done scenario analysis that any responsible enterprise does in a situation like this, and they've had 3 years to do that. The government now is decisive. It tells everybody what it's going to do. I really welcome the Chancellor's move to give money, extra money to the economy,
Right.
to lubricate this process. And I can, as I said, I can imagine that there will be short-term disruptions. That's absolutely normal when a major change happens in any economy
Right.
or any company. But I do not expect such a dark situation at all.
Okay. Well, now, Professor Blanchflower, I mean, surely the one thing that might flow from simply saying October the 31st, as the government repeatedly says, whether with or without a deal, is its certainty. And that may be what this economy needs more than anything else.
John, I think you're right in the terms that uncertainty is a really big deal. But I think the analogy doesn't really run. It's like saying we know absolutely for certain that the car is going to drive off Beachy Head on Thursday, the 31st of October. That makes no sense at all. But you're right, the big deal, and that was documented today by the Bank of England in its inflation report, talks about the fact that firms are absolutely not ready for the changes that would come if you went over that cliff. I mean, that's a really big deal. And investment is declining rapidly. And that seems like a really big deal. Why would an American company, I mean, I'm sitting here in America, why would an American company be investing anything in the UK over the next 90 days? But even after that, what is going to happen after that? So that's the great problem. And forecasts saying everything will be fine look like dream world. I call it fantasy economics.
Professor Blanchflower, thank you very much indeed. And Ms. Hosso, too. Thank you very much indeed.